Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the Morning Market Prep video for January 12th, 2024. Please forgive me if my voice seems a little bit weak. I am still struggling with a cold here, but I think I'll get through this video just fine this morning. Let's take a look at what happened overnight. First off, we had Asian markets mostly down, in fact, down across the board, except for the Nikkei that continues to zoom. Boy, they really got the zoomies over there. Up another 527 points, 1.5%, as they continue to hit record after record after record in the Nikkei, while the rest of Asian markets were lower. Interestingly enough, the European markets are decidedly bullish this morning, really pushing hard here to the upside, trying to get something going here today. Kind of a surprise to me, honestly, with the data that we have available, but they seem to be pretty happy overall. When we take a look at U.S. markets, not so much. At the moment, we have futures looking a little bit lower. And I think one of the major reasons that is the case is we've got oil substantially higher here this morning, up more than 4%, with oil futures at $75 a barrel and Brent above $80 a barrel. Natural gas also moving just a little bit higher this morning as Britain and the U.S. Carried out attacks against rebels on the Red Sea. And this time they were Iranian-backed rebels. So we'll want to be watching that pretty closely here. That could certainly cause us a lot of issues and problems. Taking a look at our bonds, our bond yields are also moving just a little bit higher here this morning, trying to assess, the price action of the market yesterday with inflation numbers going higher and the market overall ignoring that. And then also just the fact that we have this geopolitical situation adding tremendous pressure to everything here that we'll want to be paying attention to that. So what does all this mean for today? Well, how about we settle in? Let's buckle up. Let's get ready for the Friday edition of the Morning Market Prep video. Good morning once again, everyone, and thank you so much for being here. I do truly appreciate it. As you know, today is also the kickoff of the fourth quarter earnings, and we've already got a couple of stories out here this morning. First off, BlackRock is spending $12.5 billion to buy up a company. They will be announcing some earnings here as well. And Delta has just issued its earnings call and up substantially here this morning in their call. Now, I don't know why, for some reason, TC2000 is not showing me pre-market data this morning, but I'll see if I can get that fixed later. But right now, Delta producing really strong profits. Let's take a look at the markets here for today and see if we can gain some information about how we might want to approach the market for Friday. And as you can see, by the way, I want to remind everyone, because I know it's easy to forget this, that Monday the market is closed. So you want to think about that and how you plan your trades into a 3-day weekend. It'll be Martin Luther King Day, and the market will be closed on Monday. Let's take a look, see what we've got going on here. First off, those bulls did a really good job yesterday pushing back up. They didn't quite make it in that ability to break it out up here, and boy, did we have quite the whipsaws. If you remember, I talked about that possibility of whipsaws yesterday. We initially started up and then turned lower, and at one point Dow was down 300 points, and then we reversed, coming all the way back up at the end of the day, heading into today's data. So let's watch that closely. If the bulls can follow through on this, we'll want to see if they can break this resistance. And remember, if they break that resistance, we've got blue sky above in the diamonds. If the bears were happening to find inspiration today, let's look at this area down here of price support and look to see if we can challenge that. And remember, that's a pretty substantial move, about 300 or so points. And if that were to fail, then that possibility that we come down into this next area of price support, which is that all-time high breakout here in the diamonds, and unfortunately that's going to be right around 1,000 points down just to move us down into there. Let's take a look at our moving averages. We are still extremely extended away from our moving averages. They're trying hard to catch up, but my goodness, we have been so bought up here in the market, and we've been so stretched out. We have to keep that idea in mind that if earnings don't produce pretty well, we could see pullbacks in the market occur. So fingers crossed that the earnings are strong enough to support some of these prices. Let's take a look at our SPY. SPY pushed up here pretty close. Notice we ticked up there when we tried to take a look at it, and then we backed away here. And at one point in time in the day, we had a bearish engulfing candle here on the SPY. The bulls pushed that right back up here on the day. So if we can find that bullish inspiration today, this might be the opportunity that we finally break out and get our all-time high here in the SPY. Obviously, the big tech giants were doing everything that they could to make that happen yesterday. They were stretching and stretching and stretching in that after some initial selling, trying to push us through, but unfortunately just couldn't get her done. There's just not enough of the corporate buyback energy right now in that blackout period to seemingly provide the energy. So maybe it'll be earnings and the PPI data that does that for us. If they can break through up here, of course, blue sky above in the SPY. If the bears were to find inspiration, well, first off, let's see if we retest that low down here if the bears were to get going, and then this price support. If that price support were to give up, then I would suggest we're coming down here to test this next level of price support in the chart. And unfortunately, we have been so heavily bought up that any selling could turn into pretty painful selling if those bears were to truly engage. So keep a close eye on that. I do think that would be important to pay attention to. And then if we take a look at our QQQ also leaving behind this pattern here. Now, this is what they call a hammer pattern, but when it's at the top of a move like this, it's what they call a hanging man pattern, which is a bearish pattern. So the question here for today on the QQQ is, will we follow through to the upside? If we follow through to the upside, this hammer pattern or this hanging man pattern means nothing. It means that it was just a reversal on the day to push us on higher here. So we need follow through to the upside here in the QQQ. Unfortunately, if we don't get follow through to the upside here, if this goes this way, then that hanging man will be important for us here and potentially creating a lower high in the market. So if the bulls come in and find inspiration for today and start pushing up, well, let's look right up here. There's that resistance high, that all-time high breakout up here. We can push on through that, making those all-time highs. If the bears find that inspiration and we push on down, well, you can see yesterday we broke that little support area in the chart, rallied right back. So if we were to kick back down, I'd be watching that area right in there for that first break in the chart. And then, of course, we start moving lower, and we don't have much for price support in here, unfortunately. There is some price levels in here that I would be watching for a little bit of price support, at least intraday, but there's not an awful lot in here. And a failure to break above this pattern right here could essentially put us into a lower high where a downtrend could begin in the Qs. We'll want to watch that one pretty closely. If we look at IWM pushed down and at one point in time had broken this support, but you can see by the end of the day we rallied back up to grab a hold of that support. We have filled the gap here. We're still underneath this resistance in the chart. So if the bulls can follow on through today, once again, we'll look for a break of this level in here to see if we can push on through into that next level above. If the bears find inspiration today, maybe we do make a full test of this upside trend, see if we can hold that as support. And if that doesn't hold, it's a pretty good level of price support right in there, just below that area. Maybe we can kind of catch that support in that area of the chart. If we take a look at our VIX, interesting yesterday that our VIX put in an inverted hammer here. As you can see, we had some fear starting out in the morning after we had the inflation data. Market decided, nope, we want to ignore it. We don't care. We still believe the Fed is going to be cutting rates quickly, and we push the market all the way back down. One thing I will point out here is this inverted hammer. Let me get the right drawing tool. This inverted hammer last time produced that upside move. So will this one do the same? I can't say that. I don't know that to be true. What I do know is that we yesterday with this rally back up, we pushed below this trend moving to the upside. So if the bulls continue to push on through, I would expect this support area to maybe give way if they can push on through, and we might be coming down in here into this level of support down around those 11 handles in the VIX. However, if that inverted hammer does the same as it did last time, we might see those bears come around and start pushing this back up, raising that fear level just a bit. I think we're going to have to see what that data does today and how that data is going to help us make that decision. Are we going to be fearful, or are we going to continue to press this VIX lower? If we take a look at our T2122, now our T2122 indicator, it was kind of interesting yesterday. At the low point of the day, we were down here toward the bullish reversal zone of T2122. But then all of a sudden we came roaring back here, and at the end of the day we finished up here just below the mid area of the chart. Now remember, T2122 doesn't tell us which way the market's going to go. What it's doing is telling us where those pressure points are in the market. It does help us a lot when we're in the oversold area or the overbought area, but unless we're in these areas, what it does tell us is it just gives us those points that if the bulls can find inspiration here today in the data, well, we've certainly opened up a nice size opportunity for an upside move if that data supports that move. And that's the thing that I've been talking about here recently is, will the earnings support these current prices? And that's really the big question that is, well, we might start answering some of those questions here this morning before we head into the 3-day weekend. And then also think about carefully, if the bears were to find inspiration today, well, we saw yesterday how quickly we can move lower and big point moves possible to the downside if the bears were to find that inspiration for today as well. If we take a look at our T2108, we can see what I was talking about, where there was just a select few stocks that were holding the market up overall. And if you can see right here in T2108, the percentage of stocks holding above their 40-day moving average dropped pretty substantially yesterday. So even though we had the impression with that rally back that everything was bullish, Well, that's not the case. Percentage of stocks above the 40-day continued to diminish yesterday. We came down in here and we tested an area of price support. Now, if that price support holds, if the data today is bullish, we certainly could push up off of there and get some bullish action going here this morning. So watch that carefully. Nice little support area if the bulls can engage. If the bears were to engage and we continue to push on down, I would suggest maybe back down here around this 50% of the stocks above the 40-day moving average, continuing to relieve some of that kind of hyped up bought pressure. If we take a look at our T2107, T2107 declined also, but not so much as to be a big worry. This is the percentage of stocks above the 200-day. You can see in here that we did essentially hold on to some price support here in the chart. So this will be an easy place for the bulls if they can engage and push this on higher. We'll watch that carefully. And then, of course, if the bears were to come in, no harm would really come to this if we push back into this 55 area or so, catching some of these price support levels in the chart. Down beyond that, we might see a little bit more fear. Let's take a look at our T2101, and this was not a surprise yesterday. We continued to see the breadth of the market decline as we zoomed back up on the day. The breadth was still very weak overall on the day. We'll want to watch this little area right here where we've been holding. If the bulls find inspiration today in the data, then we could certainly see this push back up and spiking back higher if that can move things along here on the bullish side. But if it starts to spike up on a sell wave, that's where things could get a little bit janky there. So watch that carefully, because I do think there is the possibility of some pretty big moves. Now, interestingly enough, as I've been talking, futures have been falling hard. Right now, Dow futures are down 261 points. I'm not exactly sure what was in the news that created that move, but we are certainly showing a little bit of bearishness, and we haven't even gotten to most of the data here this morning. Let's take a look at our economic calendar for today. And our economic calendar, well, we've got a few things here to certainly be paying attention to in the chart, but not so much as to be, too terribly worried about the economic calendar. We proved yesterday that we could ignore the inflation data overall. So our CPI number we kind of ignored, even though it showed inflation pushing back to the upside. Today we've got a PPI number in here that we'll want to be watching. And looking at PPI, the consensus on this is suggesting little tiny increases as well on most areas here of the producer prices. So we'll want to be keeping a close eye on that as that number comes out today. We've also got Kashkari speaking today, and we've got a Baker Hughes rig count, which no one is going to be too concerned about. And then, of course, today we have a fairly substantial news-generating earnings events coming off today. So I'll run through those really quick because there will be no blog today. We've got BAC. BAC will be reporting today. BLK will be reporting today. BK, the Bank of New York, will be reporting. Citibank will be reporting, and they've warned that they may have a little bit of a problem here because of some losses. So keep an eye on that. Delta has reported this morning We've got JP Morgan that will be reporting, and I think everyone is anticipating a really strong report out of JP Morgan. And then UNH will be reporting today, so keep a close eye on those notable reports today. So with that, how about we take a look at a few stocks that could be setting up? But before we do that, guys, if you could do me that quick favor, if this is the first time you've seen these videos, if you could please click that subscribe button on YouTube and also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful or helpful, if you could do me that favor and click that thumbs up button, leave a brief comment, that helps the channel to continue to grow. Thank you so much for everyone who does take the time to do that. I truly appreciate it. It means the world to me. It honestly does. I never would have expected, 30,000 folks would support this kind of content without a whole bunch of hype and a whole bunch of prediction. So thank you so much. Let's take a look at some of these stocks setting up. Remember, everyone, these are not recommendations to buy or sell any security. As a matter of fact, you need to do your own due diligence. Be very careful in this market, particularly when we consider the volatility that we're likely to see this morning around these earnings events and economic events this morning on the inflation. And then, of course, heading into a 3-day weekend, there's always that hesitation in the market heading into a 3-day weekend and wondering what could happen. And particularly with this conflict in the Red Sea, escalating, seemingly escalating. 3 days off in the market could really cause a little bit of concern on your positions when things like that are happening. So plan your trading very carefully. That being said, I want to point out a few things here again in that defensive sector side of the market. As you can see, Coca-Cola pulled back yesterday, but you know what? That's still in a very bullish pattern. I'd keep a close eye on that. If we can find that bullish inspiration in the market, there's every reason to believe that could push on higher. Unfortunately, there are some stocks out there that are also showing some bearish patterns. Taking a look at Apple here, Apple rallied up at one point in time. This was a bearish engulfing yesterday on Apple, and you'll notice that we're running in this potential downtrend here in the chart. We're pressing back up here toward this resistance. So I would watch this closely. I think there is that possibility that earnings could disappoint here on Apple this quarter. Watch that carefully. The way this is looking, there is that potential for that downside move here in the market. And as you know, I've been talking about Starbucks here for a while. That really started to stretch lower yesterday until the rally back, but we're still in that bearish pattern. We're right out here toward the downtrend where we could move on lower if those bears were to engage here in the market. So watch that closely. And there's quite a few of those starting to show up in the market. They're just picking up all over the place, where there's just that hint that we could be running into a little bit of trouble. Now let's take a look at Walmart here. Walmart ended up with a big old spinny top up here. Tried to go up, tried to go down, just kind of ended flat on the day. What I like about Walmart is what I'd suggested before earlier this week. If we could break through this resistance, then we really have that possibility that this could fill this gap here in Walmart. So if this were to rest back at all, consolidate back at all toward the trend, look for that next opportunity in that chart for this to make that move on up to the upside. And we've got plenty of time. It doesn't report until next month, toward the end of next month. So we've got plenty of time for that to potentially make that move and fill that gap. So watch that close. Let's take a look at Target. Target also has made a pretty good move here, breaking above this downtrend, breaking through resistance in the chart. Any rest or consolidation in here, obviously we had some selling in there yesterday, but as long as we hold in this area, I would watch for that next opportunity here. If the market maintains this bullishness, we may be able to push on through It doesn't report for another month, so we've got plenty of time for Target to make that upside move. Take a look at MU. MU, Micron, looking pretty good here overall, and we've made this protracted consolidating pullback here back to support in the chart and back to this, well, pretty sharp upside trend. But keep an eye on that. If this can find its feet in here, there is that opportunity that could push on higher. And of course, tech is one of those areas you got to look for bullishness, because that's where the majority of it is right now. So MU might be something to pay attention to. Take a look at MDT. MDT is a medical device company, and they really take advantage of AI substantially, actually. And it's been one of the AI adopters that has really not performed all that well. So if this can gain a little bit of energy in here, this may have a pretty substantial comeback as a possibility. So you notice we broke through this resistance up here. We're kind of resting in this area. Maybe we come out and we check out a trend right in here, and we look for that next opportunity to the upside on MDT. I think it's worth keeping an eye on. For a longer term potential trade, take a look at international paper. Now, international paper shooting up here a little bit on the daily, but what I'm really more interested in is in this longer term position here on international paper, breaking that downtrend. I would really kind of prefer that this rest back into this trend just a little bit more. That's why I haven't picked it up yet, but I'm watching international paper for potentially a longer term entry and hold on a position, and good dividend yield on it, just holding for a period of time. The nice thing about these guys is you don't have to buy options. You can buy the stock itself and not have to worry about theta decay. You can hold that for a long period of time, and you've got an asset that as long as it's appreciating can really do a good job for you with some of that spare cash that you have in your account that is sitting on the sidelines that never hardly ever gets used, just simply because you don't want to risk so much here in the market with the wild swings. Swing traders typically have large capital bases in their accounts that they don't use for anything. So this is a way to use part of that. Take a look at JCI. JCI, also another very nice chart here. Potentially trying to set up, had a little bearishness coming in there yesterday. May require a little bit more rest, but I would keep an eye on JCI, looking pretty good. And on that short side, I got to bring up Tesla here. Tesla breaking this major support yesterday, failing in this downtrend. So I wouldn't want to chase it here, but any rally back now or any consolidation back out here to this trend, I would look for that next opportunity to pick up that short trade in Tesla. So I want to wish everyone a fantastic day. Let's keep a close eye on these earnings today and how the market is going to perform after that. Right now, futures have climbed back up here just a bit. We're up at 165. Well, not up 165, we're down 165, but that's better than the 265 we were looking at just a few moments ago. So we're getting quite a little volatility in the pre-market here. Be very, very careful. It could be a wild and woolly Friday. Y'all take care. Have a great weekend. Remember, 3-day weekend, and I'll see you right back here next Tuesday. Have a wonderful weekend, everyone.